Hello and welcome to a weekly look ahead at the markets, and we're looking ahead really to the US CPI inflation data on Tuesday. That's the big one. Last time around 4 weeks ago, the CPI print came down from 7.1% down to 6.5%. That was seen as a very strong positive signal to the market that inflation had peaked, that the Fed was going to be pausing soon, and that has helped catalyse the rally that we've seen so far year to date. Now, last week we saw some pullback on Wall Street. Wednesday, Thursday dropped about 2%. Friday session was a bit tougher at the start of trade in Europe as well after 3 days of gains. So we saw some sort of chopping around in the major indices last week. Really, that was the sort of story. And really it's because we're not quite sure whether the Fed is going to be pausing soon, whether it's going to keep hiking. The market's not sure. The market's not really sure what inflation is going to be doing. So this inflation reading is key, and it will drive significant volatility. So we're looking ahead to that one. Then there is also a PPI print from the US on Thursday, but that's going to be less important in the wake of that CPI number. On Wednesday, we also have retail sales figures from the US, again sort of showing where the consumer is. Remember, a month ago in December, for the December reading, retail sales fell by the most in a year, down 1.1%. Just on that inflation number on Tuesday, whilst the headline number is important, again, as I said, it fell from 7.1 to 6.5%. The one metric that I think we look at more than anything, the market's going to be paying attention to, is a core month on month. That's just how much core inflation is increasing month by month, and that was up 0.3% last month. So that is the key to look out for. If that core month on month holds steady around 0.3%, then the market is maybe not going to like that too much, because it has been buying into this disinflation narrative that's been being peddled by Jay Powell and others, and is being evinced by the data, of course. We've also got some important earnings. Well, I say important, we've got some interesting earnings. Thursday's ARC Day, so we've got Shopify, Roku and Twilio, if you're interested in those ones. ARC's had a great year to date so far, and we'll look to see whether or not this dash for trash can continue. So those shares will be watched. We'll be looking at those. We've also got earnings from the likes of AirBnb, Palantir, also CocaCola, among others. So earnings season continues apace on Wall Street. We're going to keep an eye on that one. Then on Tuesday, we're due the announcement from the Japanese government about who they're going to appoint as the next Bank of Japan governor to replace Haruhiko Kuroda, who is leaving on April the 8th after 10 years in charge. He's been the main driver behind the super accommodative, ultra loose monetary policy. They've been floating a couple of test balloons with some names floating around. A chap called Ueda, who was mentioned on Friday. He's an academic and former policymaker, not seen as maybe ultra hawkish or signalling a massive change, but the market did think that maybe it does signal a change. The yen rallied 1%, and we saw the 10-year Japanese bond yields touch that 0.5% ceiling that the Bank of Japan has for that note. So the market thinking maybe a more data-dependent, fundamental economist type chap might see some change. But we do know that the Bank of Japan is going to be easing slowly towards normalisation. But with inflation at 4%, we do need to consider the fact that the Bank of Japan actually wants a bit of inflation, and it's probably quite happy to see a bit more inflation for the time being, as long as it can be homegrown, demand-driven inflation and not imported energy inflation that we've seen over the last year. So that's going to be important. I think that appointment will be important for the yen as it trades around 130 at the moment. So we're looking to see if we get a breakout from that range that it's been holding in since that last Bank of Japan meeting. Otherwise, that's just about it, I think, for the time being. We'll be keeping you posted here as always, but stay tuned for any more updates. Thanks for watching.